There's a lot going on in the news right now, both in the US and in the UK around Angela Rayner, Lisa Cook, and Letitia James, allegations of mortgage fraud. But what is mortgage fraud? Today, I'm going to just talk you through what mortgage fraud is, how it's used, and how to avoid it, especially if you're a first time buyer, because I do come across a lot of clients who I'm doing remortgages for who have maybe taken out products that weren't suitable for what they are actually using them for. So make sure you stay tuned into the end because I'll talk you through the full process and help you avoid common mistakes that people make. So, what is mortgage fraud? So, mortgage fraud is basically lying or deliberately leaving out information during the mortgage process in order to get approved to gain financially. It can be done by borrowers, brokers, valuers, lawyers, and even politicians. My name is Anthony Lindsay, and I make these videos not to provide legal advice, tax advice, or financial advice, but instead just to talk through different things that are going on in the economy and going on in the world of mortgages. If you need a reliable, fast, honest mortgage broker, make sure that you book an appointment with me. So let's just talk a little bit about mortgage fraud, specifically fraud for housing or personal gain. So this is when a borrower lies to get a house they otherwise couldn't afford or inflating their income. So fake pay slips, fake jobs, manipulating data from an accountant, things like that. Hiding debts. So you have debts that you've hidden, not disclosing other mortgages or pretending a property is going to be your main residence when it's actually going to be a buy to let property. These are things that people sometimes willingly do, and other times, because they're getting bad advice from mortgage brokers, solicitors, friends, or family, they're getting bad advice from them on how to get on the property ladder. The best thing is, as always, to be open and honest. If your income does not is not sustainable or cannot support a mortgage, then you shouldn't take out that mortgage. Keep in mind there are specialist lenders who are there to help you if your income is a little bit low. Some lenders will do a higher income multiplier, but you should never, ever, ever do any of the things on here. And 9 times out of 10, it won't work, especially now with AI and open banking. So, fraud for housing is usually for personal gain. This is what individuals do, and it could be considered mortgage fraud. Fraud for profit. So this is systematic abuse. This is usually not an individual, but a set or group of people doing things that are illegal in order to get property. So it could be property flipping. So colluding with a valuer to artificially inflate a property's value, then selling or remortgaging it for a quick property, for a quick profit. So I'll say that again. Property flipping. So it's concluding or colluding with a valuer to artificially inflate a property's value, then selling it or remortgaging it quickly for a profit. That could be considered mortgage fraud because you're getting the valuer to lie about a value of a property and then you are remortgaging it, and it's just not something that you should be doing. Equity skimming. So taking out mortgages in someone else's name, often it's identity theft or identity fraud, collecting rent and never paying the lender. This happens a lot. And this is why you have to be very careful about who you work with, what professionals you work with, and understanding every detail of the product that you're getting. Because if you don't understand it, or if you sign things that you don't understand, you can be putting yourself in a bad position. Straw buyers. So using someone else's identity or credit history to get a mortgage. This could be mortgage fraud. And in most cases, it will be because you're using someone else's identity or someone else's credit history to fraudulently get a home that you would not otherwise qualify for. Solicitor or broker fraud. So professionals misleading lenders or diverting funds. You must work with a broker who is licensed, someone that hopefully has been recommended by a friend or family, not someone that you've just found online, not someone that has contacted you, but someone who is honest, someone that you can check their references. They work for a reputable firm and they are actually licensed. In some cases, you will find that you have solicitors, accountants, and brokers who may be doing things that they feel is to help you as an individual. It is not. If they're not doing it completely within the law and they're not following banking procedures, then it may get you into that home, but you could be committing mortgage fraud. So always work with a broker, a solicitor, work with professionals who are licensed, who are honest. And this may mean sometimes, and it happens with me quite frequently, where you have to protect the client from themselves. You have to tell the client, no, we cannot proceed with this mortgage because your income is not high enough, or because based on what you've told me, it may potentially make you a mortgage prisoner in the future. And I'm going to talk about mortgage prisoners because it's a concept that many people don't understand. And quite often, when you try to explain it to a client why you're unable to proceed with a mortgage for them, they just don't want to hear it. And this is when they end up going to someone else who will give them the answer that they want. So, systematic mortgage fraud or abuse is something that should be avoided at all costs. It's quite often a group of people who are intentionally doing it, but sometimes an innocent buyer can be caught up in this whole trap and this deception and this illegal activity. So avoid it at all costs. Red flags. So things to avoid, people to avoid, situations to avoid. So someone tells you a lie, tells you to lie about your income. So just say you earn more. So let's just say in order to qualify for a £400,000 mortgage, you're a little bit short. And a broker or a solicitor or an accountant is telling you just lie and say you make more. Don't do it. Anytime someone is telling you to lie about something, you should know, and there should be some red flags that come up. So, your income is your income. What the lender is going to want to see is P60s. They're going to want to see pay slips. They're going to want to see things that verify your income. That's for your protection. So, don't feel that lenders don't want to lend. They make a ton of money by doing mortgages. So it's in their best interest to do the mortgage and to move forward. But they don't want to put you in a situation where you won't be able to maintain your payments. Because as they always say, your home may be repossessed if you do not keep up the repayments on your mortgage. Another thing to avoid at all costs, a friend or unregulated advisor offers to get you a deal for cash. Anything that looks and sounds too good to be true, especially with property, probably is. So make sure that you're checking paperwork, make sure that the person is truly regulated, make sure that you're engaged with the seller. Because it could be a situation where this person is trying to get you to purchase a property that they have no right to be selling. So avoid that. That should be a red flag. They ask you to sign blank forms or don't explain the documents. This is a clear violation of FCA guidelines. Every broker will make sure that you understand the document. One of the criticisms that some clients have about me is that I over explain things. And throughout the process, I'll repeatedly say, do you understand? Do you want me to explain that again? So you should always understand the documents that you're signing. They should always be explained to you clearly, and you should never, ever, ever be embarrassed to ask them to explain the thing again. They should also give you the opportunity, if you want to have someone else in the meeting, to have someone else there, or to take the documents away, that you can speak to another professional who is licensed, and that person can maybe explain it in a different way or just confirm your understanding of the document. The worst thing you can do is go to cousin Bob or a friend or family member that may have purchased houses in the past and ask them to verify documents. If they're not licensed professionals, they may have the best intentions in mind. However, they may be misleading you. So make sure you don't sign any blank documents ever, and make sure that the documents that you do sign, you clearly understand. Another red flag is they encourage you to pretend you live in a property when you plan to rent it. That's mortgage fraud. So this is what's in the news with Letitia James in the US and Lisa Cook in the US. So they allegedly took out mortgages on properties that they said were going to be their prime resident when in fact they were renting them out. The reason why someone would do that is because there's different products available for your prime residence as opposed to buy to let. The criteria is different. The interest rates are different. The repayment structures are different. So they are saying, or allegedly have said, that a property that is actually rented out is their main residence. So this is what's been in the news recently in the US with Lisa Cook and with Letitia James. Now, let's just suspend the whole political thing and the why they're being accused of these things. If it is true, it is mortgage fraud. So if you are trying to purchase a property and it's going to be your residential property, and for whatever reason, a mortgage broker, solicitor, friend, or family member is saying, just get a buy to let and then live in it. Avoid it. Do not do it. It is mortgage fraud. You are misusing the product that you're getting. And 9 times out of 10, you'll get found out. So avoid it. Don't do it. Don't let anybody talk you into it. Another red flag thing to avoid: they push you into a property scheme that sounds too good to be true. I think all of us from a very young age are told if something sounds too good to be true, it probably is. And when it comes to property and when it comes to these legal matters, you absolutely want to make sure that everything you're doing is above board, is legal. And sometimes it's just beyond it being above board and being legal. You're working with reputable people because it might be above board and might be legal, but might not be the best thing for you because of the people that you're entering into this arrangement with. So I've just covered off a few red flags on things to avoid, people to avoid, and situations to avoid to ensure that you don't get caught inadvertently in the trap of committing mortgage fraud. You need to protect yourself. Here are some ways to protect yourself from mortgage fraud. Work with an FCA regulated broker or lender, or both. So I always say you should always go to a broker to get your mortgage. Going directly to a lender is not going to give you choice. And it means that instead of being able to shop the entire market and find the best rate and best deal and best product for you, you're going to one lender that very well might be giving you their best rate, but it doesn't mean it's the best rate. Even more frequently, what will happen is you'll go directly to the lender and you may not meet their criteria, and therefore they'll just say no. They're not saying you as an individual can never get a mortgage with anyone. They're simply saying that you don't meet their criteria. But this is one of the things that I find quite commonly, that people have been told no by their lender and they've given up because they think that that's saying that they can't get a mortgage, when in fact they should have just gone to a mortgage broker. Another way to protect yourself is to ask questions and demand clear expectations, clear explanations. You shouldn't actually have to demand it because it should be a part of the way that the broker engages with you. The broker should be explaining absolutely everything to you. As I say, quite often people feel that I over explain it, but I'd rather over explain than under explain. That's also why I do these videos. And that's also why I wrote my book, A Mortgage is a Really Big Loan, to explain things that people can make informed choices and feel confident about the largest purchase they're probably ever going to make in their entire life. Never sign what you don't understand. That's pretty straightforward. If you don't understand it, don't sign it. Keep records of who you speak with. If you're dealing with a mortgage broker, 9 times out of 10, that will be the only person that you're dealing with. But keep records. Make sure that you engage with each professional. Make sure that they've come recommended, or that you vetted them, that you know that they are licensed, that they are reliable, and that they're honest. You want to make sure that you're working with an honest professional. And this is where it comes, this is where we have the discussion about fees quite often, is because sometimes people will choose the professional that they're going to work with based purely on price. That's a big mistake. And this is another way that people fall into the trap of mortgage fraud. So inadvertently, they've gone to the cheapest person. So they've gone to someone who's cutting corners, who potentially isn't licensed, who is willing to do whatever to make some money. Always choose your professional wisely, and don't choose based on price. Choose based on service, Getting a mortgage is as fast as the slowest person, and one person not doing their job properly can cost you a lot of money instead of saving you money. Use reputable solicitors and conveyancers. That goes without saying. You will find sometimes the more reputable ones are a little bit more expensive, but they're more expensive for a reason. So, this is how you protect yourself from inadvertently falling into the trap of mortgage fraud. So, this is for someone who may be out there, maybe a little bit naive. You're a first time buyer, and these are ways that you can protect yourself from getting yourself in trouble. But you need to understand the mortgage process, especially if you're a first time buyer. So, the mortgage process, I've broken down into something I call SID: credit, income, deposit. So check your credit file. Check your credit file at least once a year. I would say twice a year, but certainly 6 months before you're ready to get the mortgage. 6 months before you're ready to get the mortgage. Check the credit file, speak to a mortgage broker. Anything that's on there that needs to be resolved, by going to the mortgage broker 6 months in advance, it gives you time to get it resolved, to get it updated on the credit report, that when you apply, you can have the very best chances of getting the very best products. So the first step is to check your finances and speak to a mortgage broker. The mortgage broker will then be able to get you an agreement in principle. Make sure that the agreements in principle is validated. So they're not just taking your word for what your credit profile is or for what your income or outgoings are. They're actually checking it, sanity checking it, and maybe even talking to the lender or the business development manager to establish if there's anything that would prevent that agreement in principle from converting into a full mortgage offer, because that's actually what you need. Find a property, make an offer. So, looking for a property takes way longer than most people think. The negotiation process takes longer than people think, but it's the next step. Once you have the agreement in principle, that's telling you how much you can afford and how much a bank will give you. But keep in mind with that, the bank may be happy to lend you money, but they may not be happy about that property. So please make sure that your mortgage broker is involved in the negotiation process, that they can ask the questions to understand things that might make that property unmortgageable, like a short lease, or maybe it's above commercial, so it's above a chip shop. Things like that will make that property harder to mortgage, or you may need to go to a specialist lender. Submit the full mortgage application. So you've found the property, you've made an offer, the offer's been accepted. You're now going to the lender and saying, I have this agreement in principle. I now want to use that agreement in principle to purchase 123 Main Street. The lender will then do a valuation. It's a valuation, not a survey. So the valuation is to establish how much the lender thinks the property is worth. Once they've done the valuation, they'll do the underwriting. This is when they check your income, your outgoings, your bank statements, your visa status, everything. This is where those documents that you would have provided will be sent to the lender. They do the full mortgage application. After they've completed the underwriting, they give you a mortgage offer. From there, it's just really the solicitors. The solicitors go back and forth with each other to go through the contract. You get your exchange date and you get your completion date. So that's the mortgage process. So if you're a first time buyer, don't make the common mistake that many first time buyers make, which is to go out and find the property first. Always speak to the mortgage broker first. How do you prepare to get a mortgage? My simple process is credit, income, deposit. So, credit, pay bills on time, check your credit report, avoid missed payments, late payments. If you have CCJs, defaults, anything like that on your credit report, it will impact your ability to go to the top tier lenders. So, if it's a small amount, £200, even if you were right, even if you feel that you were right and that should not have defaulted, it should not have been a CCJ, just pay it off. It's always better to pay it off and then dispute than go through with a mortgage application with unsatisfied CCJs, defaults, or anything like that. So make sure you pay your bills on time. So that's the credit side of things. And it's not your credit score, it's your credit profile. The next thing is your income. So stable work history or your accounts if you're self-employed. You can get a mortgage as a self-employed person with 1 year's worth of accounts. There's fewer lenders that will do that, but it is possible. But if you're planning on getting a mortgage and you're full-time employed, make sure that you understand what your annual salary is. Make sure you have the previous year's P60s. So that's PAYE employed. Some lenders won't lend if you're in the probation period. Some lenders will lend if you just have an offer letter from a national company. So not from friends or family, not from Joe's Chicken Shop, but if you have a job offer from, let's just say, the NHS or HSBC Bank or a large firm, some lenders will take that and take that into account. I'd say on the self-employed side, you cannot have a pay increase and expect the lender to accept that pay increase. So what I mean by that is, let's just say you work for your family business, and every year you've been making 30,000, but then all of a sudden when you're applying for a mortgage, all of a sudden your salary has been increased to 70,000. It's not going to fly. What the lender is going to look at is how much you've been making over the previous years, not how much you're getting paid now. Because this ties into the whole mortgage fraud thing, whether it be inadvertently or intentionally. Lenders know you can go to cousin Bob and say, "Oh, I'm applying for a mortgage. Could you increase my salary?" in order to be able to qualify for the mortgage. It's not good for you. It's not good for the lender. And it's not good for the person that is increasing your salary. Lenders will look at the company's house filing records. They'll say, does it make sense? Does this person who's been making £30,000 a year working for cousin Bob for the last 2 years all of a sudden warrant an increase up to £70,000 a year? So make sure you're always honest. Make sure that you're not doing anything that could put you in a position where you could be accused of mortgage fraud. Because not only will it get you in financial problems, it could also get you in legal problems. So that's the income status. Best thing, PAYE, if you're full-time employed, make sure you have your employment contracts. Now let's look at the deposit. Save, use a lifetime ISA or explore schemes like shared ownership, first homes, or right to buy. So your deposit can be a cash deposit from savings. Make sure that your savings are easily tracked. So you get your salary, you then transfer that into your lifetime ISA or high interest savings account. So savings are very important, but you may be one of the fortunate people who is in a council property who has the right to buy. You can, in most cases, use the full discount as your deposit. I've done mortgages for right to buy clients where they haven't had to come out with a penny for the deposit. Simply, they've had to pay the accountants if they're self-employed. Maybe they've had to pay the solicitor, and they paid their broker fees. But as far as the deposit, they haven't had to pay a dime out of their pocket because they've used the equity in the property or the discount in the property to purchase that property. If you live in a council property and you have the ability or right to apply for right to buy, make sure you reach out to me. It's a great scheme. Even though it's reduced as of November of 2024, it's still a great scheme. Always look into it and always make sure that you speak to a mortgage broker that you can assess how much you'll be able to get versus how much you need. And then let's look at the criteria. This is the thing that trips up a lot of people, especially people who spend time on social media or people who watch the news. You have to understand that the criteria for your profile may be different than your friend or your barber's. What I mean by that is if you are self-employed with a non-UK passport, the criteria for you will be very different than a full-time employed person with a UK passport. So don't compare yourself to other people. Always speak directly to a mortgage broker who understands your personal circumstances and can assess your mortgage needs and can tell you how much you can borrow. So the best way to prepare, I guess in a nutshell, is to speak to a mortgage broker. The common mistakes that first time buyers, remortgaging clients make, and just people in general, is taking out new loans or credit before applying. So there's this myth or misconception from some people that, all right, what I'm going to do is I need £10,000 for my deposit for my home. I'm going to go out and get a personal loan for £10,000 for the deposit for my home. Bad idea. And usually it won't work. And here's why. If you take out a £10,000 loan prior to applying for a mortgage, firstly, your credit score might drop. But more importantly, what's going to happen is those repayments that you have to make on that loan, on the personal loan, are going to come out of your affordability anyway. So if you're paying £200 a month to repay that loan and you only had an affordability of £800 a month anyway, then that means it's going to reduce it to £600 a month. So it's kind of robbing Peter to pay Paul and messing up the mortgage application. So speak to a mortgage broker 6 months before you're ready, and they can give you a game plan and a blueprint on how to be on track to get the deposit that you need and also protect your credit profile. The other common mistake that people make is not budgeting for solicitor fees, surveys, and moving costs. So your deposit, so the money that you're going to pay down on the property is just one of the things that you have to pay. You do have to pay solicitors. You do have to pay your broker, and you may have other moving costs. You may have to pay for the valuation. So if you have a, let's just say, £30,000 deposit or your savings is £30,000, it doesn't mean that that full £30,000 can be used towards the purchase, because some of it will be used towards paying solicitors and broker fees. A common mistake that people make is not budgeting. And remember, there's two things. Buying a property always takes longer than people think, and it always costs more than people think. So make sure that you're budgeting, and budgeting based on real information from speaking to a mortgage broker. Another big mistake, and you know it's one of my pet peeves, trusting mates rates instead of regulated professionals. There are fee-paying mortgage brokers, there are free mortgage brokers, or you can go to the bank. Don't go to an unregulated mate. Don't listen to your barber. Don't listen to your beautician or your gardener or your electrician or your plumber, no matter how many mortgages they've taken out. Always speak to a licensed professional and be willing to pay for their professional services. Having the right professional in your corner will save you money. It won't cost you money. In my case, as a mortgage broker, on average, if I negotiate the deal for the client, on average, I save them £2,500. On average, sometimes I've saved people £35,000 by negotiating the deal for them. That's on higher value houses, of course. However, you have to pay for my services, but my services are far less than the 2,500 that I've just saved you in real money on your mortgage. So avoid mates rates, deal with professionals, don't try to barter. Their fee is their fee. If you can't afford it, then find someone you can afford. But remember, buying a house is more expensive than you think. Don't try to cut corners with solicitors or brokers. The other big common mistake, and I want to warn everyone against this and also give you some tools, buying well beyond your budget. My grandmother used to say, you ride crooked till you can cut straight. Another way of looking at it is your first home may not be your forever home. So you may need to buy in a zone further out than you had intended. You may not be able to have the extra room for your gym or for your office. You may need to start with what is suitable for you now and then build. So a great way of estimating the property price that you can afford, and this is just a rule of thumb, is to take your income, multiply it by 4. So if your salary, and this would be potentially the combined income or all the people on the application, let's just say the combined income is £50,000 a year. You take that number, multiply it by 4. So 50 times 4 is 200. So that means you can get a mortgage of 200,000. Then you add your deposit. So if you had a £30,000 deposit, 200 plus 30 is 230. You can purchase a property price at the top end of £230,000. Yes, there are things like loan to valuation and criteria, etc. But if you go into the conversation with the mortgage broker using that calculation, You'll probably be surprised if you can get more. But what people frequently do is they go to Zoopla or Rightmove, or they talk to friends and family and they talk about, well, ABC Bank does a income multiplier of 7 times your income. This puts you in a situation where you're buying well above your budget. And if things change, you can become a mortgage prisoner. So make sure you stay within your budget. What is a mortgage prisoner? Let me talk you through the concept of mortgage prisoners. It's a concept that people aren't familiar with. Some people even feel it's unfair. Most people don't understand. So, a mortgage prisoner is someone who's trapped paying higher mortgage rates because they can't afford to remortgage under today's stricter rules. Even though they're reliable payers, they haven't missed any payments, they haven't had any late payments, they've done nothing wrong, but they actually cannot remortgage. It's usually not due to changes in their circumstances, or actually it's usually due to changes in their circumstances and not because they've done anything wrong. So let me say that again. It's usually changes in their circumstances or changes in the market, not because they've done anything wrong. So they become what's known as a mortgage prisoner. I've had clients who on paper I could do a mortgage for, but when I look at it and look at their exit strategy, so what's going to happen when that fixed term is over? When I look at that, I'm like, it's going to be tricky for you. So what happens? After the 2008 financial crisis, new regulations required lenders to run tough affordability checks. Many people who originally got mortgages under the old rule no longer pass or qualify. The new tests, even though they're already paying a higher rate without problems. So, what that means is you have a mortgage, the previous guidelines said you could afford it, and you've been paying it. You now go to remortgage and you don't pass what they call the stress test. So, you don't pass the new criteria to get a mortgage. And you're saying, well, look, I'm paying every month. I've been paying every month, never missed a payment. I'm actually paying more than I could potentially remortgage for. But the newer lenders are saying, you don't pass the new affordability tests. And this can happen if you buy well above your budget. So sometimes this happens because the lender exits the market. So borrowers can't remortgage with them and may not be able to meet the criteria elsewhere. If you've purchased a home and you've done a really low deposit, so maybe you've done a 5% deposit and the value hasn't gone up. In fact, the value of the home has gone down when it comes time for the valuation. That can make you a mortgage prisoner because it means that you won't be able to remortgage because the LTV is off. If house prices fall, the mortgage balance might be too high compared to the mortgage value. And I would say one of the key reasons right now for mortgage prisoners is the exit strategy on a joint borrower sole proprietor mortgage. I do a lot and talk a lot about joint borrower sole proprietor mortgages. They're fantastic if you have parents that want to help you out and buy your first home or maybe even buy a new home. But the problem is if you're putting an older parent on that mortgage, every single time I've had that discussion with the parents and the children, the first thing that the parent wants to know is when can I get off the mortgage? I've paid my mortgage for 27 years. I've almost paid it off. I'm now committing to another mortgage through this joint borrower sole proprietor structure. So the parent wants to know how they're going to get off the mortgage. And the reason why you can end up as a mortgage prisoner based on JBSP is, let's just say, you get the mortgage and you were way off salary wise. So you put a parent on there. When it comes to exit, you've told the parent, you know what, mom, dad, I'm going to remortgage and I'll do a remortgage by myself. But that 2, 3, or 5 years later, you're unable to remortgage by yourself and you still need them. But they're past retirement age now, or they're unable to be JBSP for you for other reasons. What do you do then? You're now stuck in a situation where you switch to a standard variable rate, which might be even higher than if you were able to remortgage. So, being a mortgage prisoner is something that can be avoided if you listen and trust your broker when they're talking you through what happens when it comes time to remortgage. So, you may be able to get the mortgage and it may fit on paper and it may look great, but a conscientious and honest mortgage broker is going to have that discussion and say, well, what happens if you're unable to remortgage? You'll become a mortgage prisoner. So, what now? We've talked through what mortgage fraud is. We've talked through the process of getting a mortgage, and we've also discussed mortgage prisoners. Buying your first home is exciting, but being prepared protects you from costly mistakes and possibly committing fraud. Sometimes people end up intentionally committing fraud because they're so desperate to get a home because they didn't plan. They've waited until the last minute and they put themselves in a situation where they have to do something that goes outside of the guidelines and policies of legally getting a mortgage. I'm not condoning it and I'm not making excuses. Never do that. But planning can help you be in a situation that you know where you need to be 6 months from now, 12 months from now, that you can then prepare yourself, put the things in place that you need to put in place. So start your mortgage readiness 6 to 12 months early. You might feel like, well, I don't want to waste a broker's time 12 months before I'm even ready. Good brokers will love to have that conversation with you. I love speaking to people that are like, listen, I'm considering buying a house in 6 months or in 12 months. What does the situation look for me like now? What does it look like for me now? And how can I get to the position that I'm able to buy that £425,000 house based on a budget of X per month? Things change in the mortgage market. So what we discussed today won't 100% be the same thing as 6 or 12 months from now, but at least you can get a feel because the core criteria doesn't tend to change. Interest rates change and therefore monthly repayments will change and house prices definitely change, but the core criteria stays the same. So in short, what you want to do is book an appointment with me. My name is Anthony Lindsay, and I've been in finance for over 30 years. I've done everything from debt management, wealth management, mortgages, and lending. I have a promise to you, and this is not a promotion. We do not charge any broker fees until we've got you a full mortgage offer. The way that our system works, we'll do a free mortgage capacity report. So within the first 7 to 10 minutes of our conversation, we'll establish how much you can realistically borrow. And hopefully that is in the frame of what you need in order to get the house you'd want to live in. Okay. So within the first 7 to 10 minutes, we'll say, yeah, it looks like you would qualify for a mortgage of X. And as long as that's within the range of what you need to purchase a home you would want to live in, we will then continue. But either way, we'll provide a free mortgage capacity report that will talk to you about affordability, loan to valuation, all of the key things that you need to know, as well as a game plan for how to get to where you want to be. From there, if you want to continue, we'll do a full review and fact find. We'll gather your documents, so pay slips, bank statements, everything that we can assess and make sure that you truly meet the criteria for an agreement in principle that will convert into a full mortgage offer. Because if it's not going to convert into a full mortgage offer, then it's pointless. So we do all the work up front. At the point where you decide that you want the agreement in principle, that's when you would pay an application fee. So the application fee is essentially for the work that's already been done. You get your agreement in principle. From there, you go out, you find the house. We do not charge the broker fee until you get the full mortgage offer. This is not a promotion. This is what we do every single day. So if you're considering buying a house and you want to understand how much you can borrow, the free mortgage capacity report is something that you definitely want to get, that you have a feel for how much you can borrow. Once you know that, if you've already found a home and the estate agent is asking for an agreement in principle, we can produce that agreement in principle for you, and we can assist you throughout the whole process. We'll provide guidance. If you need a solicitor, if you need other professionals, we can refer people to you, or you can just move forward with the professionals that you already know. We're fast, we're reliable, And we will always make sure that you don't fall into any traps, that you're not misusing or abusing the bank's products. You will always be in a solid position when you need to remortgage. So we'll ensure that within our ability and our capability, that we don't put you in a position where you end up as a mortgage prisoner. It's important that you understand how finance works. Some people are embarrassed, especially adults, to talk about things like mortgages and ask questions. That's why I've written my book, A Mortgage is a Really Big Loan. It's available on Amazon. A mortgage is a really big loan is based on my 30 years of experience in finance, both in the US and the UK. We talk through things like mortgages, self-employment, first jobs. We have a chapter or two about estate planning and wills. Make sure that when you're getting your mortgage, you have a serious, meaningful, good faith conversation with your broker about estate planning. Many people in the UK do not have a will, which means when they pass away, not only will it be stress to the family that are left behind, but it could also mean that your property or even your children are not handled in the way that you would like. Estate planning is about making sure that future generations benefit from your hard work and that what you want to happen actually happens. You also want to make sure that you have the appropriate protection in place, such as income protection, life cover, and critical illness. Depending on what statistics you look at, either 3 and 4, or so 1 in 3 or 1 in 4 people will suffer cancer in their lifetime. So make sure that you've had a conversation to protect yourself and have the right protection in place. A Mortgage is a Really Big Loan is a great book for anybody who just wants to improve their financial literacy. It's also a great gift if you have young people who you know want to get on the property ladder and want to start to prepare themselves. Or if you know someone that's recently moved to the UK and wants to understand how the UK financial system works in everyday language and wants to understand how they can prepare themselves to get a mortgage, make sure you buy them this book as a gift, or make sure you tell them about the book. It's available on Amazon. My name is Anthony Lindsay, and I do these videos to improve your financial literacy, to talk through mortgages and other financial instruments. I don't give financial advice, I don't give legal advice, and I don't give tax advice. These videos are not designed to replace you speaking to a qualified professional who understands your needs, who you've been open and honest with. So make sure you speak to a mortgage advisor 6 to 12 months before you're ready to buy. Or if you already have a mortgage and you need a remortgage, make sure you reach out to me. I provide a free mortgage capacity report so you'll know exactly what you qualify for before you pay a penny. Thanks for watching, and make sure you like, make sure you subscribe, and make sure you leave comments. If there's a topic that you'd like for me to discuss, please let me know in the comments section.